Good morning, everybody. It's Tuesday, August 10th. Just going to run through the morning charts here. We've got the Kiko overlay chart. Yesterday we spent most of the day just trading within the previous day's range, and this morning we're seeing gold. It started out right on the support and it broke down, and now it's starting to slide. So if I pull up the daily and intraday chart of gold, you can see here's a daily chart, and I've pointed out the last couple days that we're at a pretty good resistance point here, and we're looking for a possible pullback, and then we're going to look for a reversal candle as we start a new trend up, as momentum has seemed to turn up for gold. So we're going to look for a pullback and reversal, probably a nice lower wick, and then a close near the top 10-20% of the candle, and from there we'll take a long position and hopefully catch a nice move up to around the 240 area. So that's what I see for that. As for the intraday chart of gold, you can see, just zoom out a bit, pulled up into this resistance level. We had that pop on the jobs report. I really thought it was going to roll over here, but that jobs report just gave us one more surge, and now it's started to roll over. And what we're looking for, and what I'm kind of looking at here, is simply, we've seen a sharp pullback. We saw some pretty good selling volume, and there's, for pre-market right now, this time in the morning, there's actually pretty good selling already, and we're getting another push down. And right now we're trading somewhere at a support level here, which can carry right into this top over here. So we are at a short-term support level, and I do expect we're most likely going to get a drift up. It'll be a funny angle like this, just a bear flag, and it'll bring it somewhere right into this resistance point. Could happen later today or through the night tonight, and hopefully we can get a shorting opportunity, and we'll catch a breakdown to around the 1180, 1185 area, and then from there hopefully we see a lower wick and then a reversal to the upside, and that'll give us a new support trend line and confirmation that buyers stepped in and pushed it back up, and then we'll hopefully head higher from there. So this morning I think a majority of the move is done. We might see a bit more of a quick spike shakeout, and then I think we're going to see a drift up, and it will hopefully form this mini head and shoulders top pattern here. So we've got a shoulder, we've got a head, and hopefully another shoulder here, and hopefully it'll drift up on light volume, and then we can take a short position, play the downside, and then once we see capitulation selling here, we'll look to take a long position. So that's what I'm looking for gold. As for the SP 500, here's a 30-minute chart. You can see yesterday we had, I'll just zoom in a little here, it popped up higher in the morning, sold down to fill the gap, and then it pretty much traded inside that range. Traded inside this range for a majority of the day, and then finally it squeezed its way higher. There was a little bit of volume surge, mostly because it broke the morning's high, so it triggered a bunch of stops and got a bunch of breakout traders to jump in, so you naturally get a surge of volume, but it wasn't anything huge. Yesterday's volume was extremely light compared to other days where you can see the average volume trades much higher for a majority of the day. Volume has been light for really the past couple weeks, but yesterday was pretty pathetic. It was very light volume. Anyways, we got a quick pop in the afternoon right into resistance, and then some sellers just kept holding it down, and that's where that kind of held. Let me just pull in a couple other charts here. Here's the put-call ratio, and it's a 30-minute chart. And here is the NYSE advanced decline line, and what I want to just show here, the put call ratio, the average price it's been trading at is around the 77, 80 area. So every time it pulls back to that level, it means a lot of people are buying calls, and that's the norm for now. This level usually changes depending on the market condition, but that would be considered a bearish. It would be almost like this red line for where that is. So this is the average here. So every time it pulls down here, it means people are buying calls. they're comfortable with the market, and usually when they're comfortable with the market rolls over and goes against them. And if we look down here at the put call ratio, or sorry, the advanced decline line, you can see yesterday we had the stocks advance up near the overbought condition. And then if we take a look on the put call ratio, everybody was somewhat comfortable with the market and they thought it was going higher, so they were buying leverage to the upside. And I mentioned in the afternoon it looked like a really good short, but with the news coming out with the FOMC today, I didn't really want to get in front of that. So I figured we get a drop in the morning. And if we take a look, I'll just pull in the chart here. I'll pull up the SP futures and change the time frame to 24-hour clock. So this is, I'll show you here, this is yesterday's price. Yesterday we had it gapped open right here. We saw it come down, it filled yesterday's gap, which was right down into this area, and then we saw it trade inside this range for the majority of the day. And then we had the small pop, and this is where I was saying it looked like a pretty good short. And anyways, the market was overbought. You can see the market was overbought in the morning or in the late afternoon. Everybody's buying calls, and we were at pretty major resistance level. And through the night, futures have just stair-stepped their way lower. And this morning, though, they're getting a pretty good little downdraft here on some rising volume. And that was kind of expected, but you don't really want to get in front of some big news that everybody's waiting for, because we'll get some very large price spikes, and those price spikes can really hurt the pocketbook. So if I just zoom out here on this, just move this chart over, you can see this is the past couple weeks, and I've pointed this out. We've been trading at a pretty major resistance level from way back in June, and yesterday, of course, we had the pullback. It squeezed up to this upper resistance level, and everything was kind of saying, you know, we've got most likely a good short. But with the news today, we don't want to really touch it, because we could see a huge spike to the upside. We could see a huge spike to the downside. Nobody knows what they're going to say, and there's no point in getting in front of that. So that's what I see is going on right now, and we're going to keep an eye on it. We'll have to see what the volume is after today once the news comes out. Now there will be a normal blip, and it'll last for 15-20 minutes anyway, and it usually goes in the opposite direction of it'll blip the opposite direction of which way it should go afterwards. But you want to wait for that blip to kind of settle out, and then we'll kind of take a look at things and go from there. Anyways, that's it for now, and I'll talk to you guys in the chat room. Bye bye.